Hello and good morning, everybody. Welcome to this particular session. And today I want us to discuss about how institutions use news while retail traders panic. And the key thing that we need to understand is that retail traders fear news. Institutions prepare for the same, and the difference changes everything. So it's not about fearing, but it's all about preparation. And this is the purpose of this particular video, to show you how you can be able to prepare for the same. So probably you have seen it before: news drop, price spike aggressively, stops get hit, spreads widen, and that causes a lot of panic for the retail traders. But behind that chaos, there is structure. And in this video, I'll show you how institutions use news and why it often creates opportunities instead of randomness. So this is a video probably for those traders who avoid the news completely or out of fear, get caught in volatility spikes, or probably feel like news make the market unpredictable, or what to understand what's really happening, or those who want to understand what's really happening during the high impact news. What you need to understand is that news doesn't create direction, it creates volatility. And the liquidity decides the direction. So it's not the news that decides the direction, but the news creates the volatility. Then now liquidity is what decides the direction where the market is likely to go. Okay. So, and when you look, what retail traders think news does, they believe that news cause price to move randomly, outcomes are unpredictable, and trading during news is gambling. So they either avoid it completely or they jump in passively. So both extremes comes from misunderstanding. News doesn't remove structure, it accelerates a movement. And this is what institutions actually do. So institutions, they don't react emotionally to news. They anticipate volatility, they position around liquidity, and also they use news to access orders. Why? Because volatility increases order flow. Okay. It is from that volatility that it increases the order flow, right? And also volatility increases liquidity available, and also it increases execution opportunities. So therefore, what you need to understand is that news provide the fuel needed to fill large positions efficiently. And you realize that before the news, traders place stops above resistance, above support, and around consolidation. So when the news hit, price moves rapidly, stops, the stop losses get triggered, and breakout traders enter the market. This creates a surge of liquidity. Therefore, price may either spike up then reverse, or spike down then reverse, or expand strongly after clearing both sides. The spike isn't random, it's liquidity being accessed. Right, it's liquidity being accessed. So if you look at this particular chart here, this is Wednesday 18th, right? Wednesday 18th, Wednesday March 18th, when we had the FOMC, and this is the candle of the 9 a.m. New York time when we had the FOMC, right? 9 p.m. Kenyan time when we had the FOMC. So this is the candle where to begin from 5 minutes chart, right? Look at it. When the news were out, the price began by pushing up. Okay. So why is the price pushing up? The price is restructuring here, right? Because if you see, once if you understand what really happens is that you need to have done your analysis prior to the news, so that now you can be able to anticipate some key levels that the news is going to push to. So they maintained the rate the same, but they had a dovish, a hawkish stance, right? Meaning the dollar strengthened. This is GBP USD. So what it tells you, look at this candle here. This is the candle for 9:30, right? 9:30 when the press conference begins. So the market starts reacting to the weaker, to a stronger dollar, and therefore the reason why we see GBP USD push on the downside. Okay, let me show you something. When you look at the previous day, we talked about liquidities, all right? So when you look at the previous day, the sell side liquidity, which is an external liquidity, was taken out, right? That was taken out. Okay, so because you need to understand the context of the market, you need to understand the context of the market before the news. What is the market trying to communicate? So already these liquidities had been engineered, right? The buy side liquidity. So if the buy side liquidity has already been taken out, what will we be targeting? Because we said you're trading from buy side to sell side, probably most of the time that's what the price does. So you come to this particular point, that's where we have the lows of this particular day. Okay, that's where we have the lows of this particular day. And at the back of our minds, what we need to understand is that now what the price will be doing, right? What the price will be doing, it will be most probably coming to take out these liquidities, right? It will be coming to take out these liquidities. Okay, so look at it also in this particular case scenario. The market takes out the buy side liquidity. Here we have a reversal confirmation. That is that reversal confirmation. The market pushes down there. We have a change of character, right? And then the market pushes back again. So this was a very nice entry during the New York session, right? During the London session. So the market pushes back to this particular order block, and you see it comes here at 7:15. That is the London Open, right? The London kill zone, during the London kill zone, I mean. So, and the price now starts displacing, and you have a very nice entry. The market starts to retrace. Before the news, we see this kind of retracement, the market pushing all the way up. Remember, we are already done with these liquidities. The external liquidity has taken out, and we have seen a change of character. Therefore, the structure is now a downtrend structure, right? The structure is a downtrend structure. So if that is a downtrend structure, therefore it tells you that the buyers of this particular day is bearish, because you have taken out the external liquidity, that is the buy side liquidities at this particular point, that has been taken out. We have seen a change of character, and therefore we have seen also an entry here, and you take that particular trade. Now we have the news coming in. So probably if you're swinging the trade, you can either wait, right, because you're already in the trade and in profit, so you can stick in the trade. And when the news come, remember what you're looking at. First of all, we are targeting what? What are we targeting? These intermediate lows, right? These intermediate lows here. But at the bigger picture, right, these are internal liquidities. But in the bigger picture, we are talking of the price going to the sell side liquidity, which is the external liquidity. And when the news came out, this is what the market did. Pushed all the way down to this particular level. Okay, pushed all the way down to the sell side liquidities. Okay, to the sell side liquidities. Remember, when you are taking your entries from this particular point, maybe probably the market had pushed all the way down to this. Of course, it has pushed all the way down to that before the news. So before the news, we saw that kind of a retracement, and the price is trying to rebalance itself. So when the news come, it still respects the structure, right? The news still respects the structure. Remember, we said news doesn't remove structure, it accelerates the movement, right? So, and then now it gives us, that news gives us the acceleration, the FOMC. It gives us the acceleration now to come and look at the sell side liquidity, right? To look at the sell side liquidity. Look at it. The sell side liquidity is taken out. Okay. So what do we have? We see the price push up, right? We see the price push up, come all the way back again to this particular point, and all this, right, as the price is doing that, it takes out these particular lows, right? These are the lows of the day, the sell side liquidities for this particular time here. So, and it creates other lows here, and then it pushes up. What happens is that as it pushes up, now at this particular point we see a change of character, right? And now we are aligned in bullishness, and now you can see the likes of the BOS, right? That is the following day. And the order blocks here where the price comes into that particular order block. And then now we push up. Where are we pushing up to? The buy side liquidity. Why is the buy side liquidity? Remember the highs that were created here yesterday. Okay, the highs that were created there yesterday, and the price does that exactly. So the reason why I explain this is so that you can understand that we trade externally. I mean, we trade internally going externally. So when you see the buy side liquidity is being taken out, most probably the price will be now going to the sell side liquidity. When the sell side liquidity is taken out, the external liquidity taken out, sell side, most probably will be going for the buy side liquidity. Okay, so but let's go back to the news because we are discussing the news here. So um, because of this aspect, the reason why I was explaining that institutions, they don't react emotionally to news. They anticipate volatility, position around liquidity, and they use news to access orders because volatility create order flow, liquidity availability, and execution opportunities, right? So news provide the fuel needed to fill large position efficiently. Okay, so if you understand that as a retail trader, I believe trading news will be a bit easier for you. Okay, and of course, like we have said, news don't distort the structure; they actually accelerate the movement. Okay, so and there is this concept of the stop hunt illusion during news. So traders often say that the market hunted my stop, but in reality, what you need to understand that stops were clustered. Price moved towards that liquidity because where stops are clustered, that's where liquidity is. Those obvious levels, right? And volatility simply accelerated the process. Therefore, news don't create manipulation, it reveals existing liquidity. And understanding this concept removes the fear when you're trading news. It removes the fear completely when you're trading news. How do you approach news strategically now as a retail trader? How do you approach the news strategically? So I'm going to give you about four strategic steps that will help you to approach news strategically. Number one, avoid trading the initial spike. Don't be in a rush. Okay, don't be in a rush to trade the initial spike. The first move is often erratic and liquidity driven. Okay, it is always erratic and liquidity driven. Wait, number two, wait for the structure after news. Let the price settle, form direction, and reveal intent. Okay, all right. So probably this was the news here. So what we are saying is that as the market comes all the way down here, because this was the news at 9:30. So for you, you have already done your analysis. You saw that the buy side liquidities were taken out here, and therefore we have a change of character. Where we are coming to is this particular level. Don't be in a rush even to take the trades, even if you know it's coming here, because the first move might always be erratic, and you'll be trading that erratic move, which means it's not really the right thing to do. So just monitor. Then now wait for structure after news. The sell side liquidities have been taken out. Okay. So now wait, start looking for the structure where we have the shift in market structure, change of character around this particular point. The following day, this was FOMC. This particular point here now, that's where the structure is being formed. And this is where you should be looking at for your entries now. Okay, we have seen the change of character, and now we are seeing the price creating higher highs and higher lows. And therefore now you get your entry around that particular point because the structure has confirmed. Okay, so the that thing is identify liquidity before the event. Okay, so remember we had identified these liquidities before the event. We had seen the sell side liquidity, buy side liquidity has been taken out, and therefore the price, because of the change of character, the price might be coming to take out the sell side liquidity. Okay, so mark where the stops are likely to be resting. Expect those areas to be targeted. These areas here to be targeted. After the structure, also identify where we have these obvious levels, the buy side liquidity. So anticipate those areas to be targeted, right? So then now use news as context, not signals. So news is not your entry trigger. It's an environment shift, right? It's an environment shift. And the reason why you have seen I didn't say that we trade this particular move. I said after the news, the stops has been taken out and the structure has changed here. So this is the level now to start looking at your buying opportunities. Of course, anticipating these trade to be these buy side liquidities to be taken out. Okay, so and you can have your trade very well at that particular point. So this was during the London, the New York kill zone. Write your stops below there, and you are targeting these liquidities at that particular point, and that is a risk to reward ratio of 1 is to 8.67. Waiting patiently. You did not gamble with the news. You waited, right? The structure formed, the liquidities were taken out, a structure formed, and now you get the context of the market. Where is the market likely to go? And you take your trade from that particular perspective. Okay, so I repeat, how to approach news strategically. Here are 4 practical approaches. Number 1, avoid trading the initial spike. Number 2, wait for the structure after news. Let the price settle, form direction, and reveal intent. Number 3, identify liquidity before the event. So before the news, do your analysis, technical analysis, and identify where liquidities are resting, because these is areas where stops are likely to be resting. Expect those areas to be targeted during the news. Then number 4, use news as context, not signal. So news is not your entry trigger. It's an environment shift. Okay. So the reason why I'm sharing this is because initially I used to either avoid news completely or chase the fast move. Okay. I began by avoiding news completely. Then now I went to chasing those fast move. You know, we have been trading, initially I've been trading NFP, CPI, came out about with different strategies on how to trade the news. But the moment I came to understand this particular context that I've shared today, that news create liquidity events, I stopped reacting and started observing. The reason why you see majority of you, even when you're doing the NFP live analysis, they usually tell me there is someone who really said that, team, you know, nowadays you don't tell us to buy or sell. What's up, right? It's because there is something I had understood. Okay, so you need to be calm, right? You need to be calm, because calm when trading news replaces the chaos, right? So in summation, what you need to understand is that news increases volatility, exposes liquidity, and accelerate movement. It does not remove structure, it does not guarantee direction, it does not justify impulsive trades. So institutions use news as opportunities. Retail often treats it as a danger. So what you need to do is to shift your perspective, and your shift will help you now shift your results. Okay, you shift your perspective and you shift your results. Right. So in the next video, I'll be talking about or breaking down the truth about kill zones and when to avoid them, because trading at the right time matters, but knowing when to stay out just as much matters a lot. Okay, so until the next one, keep safe.